Imagine you invest in a high-end commercial property, hoping to collect rent from a tenant. But instead of offering you regular payments, this tenant proposes something else: a small stake in their business's future earnings. There's a catch, though. You won't know when those profits will appear, or if they ever will. In fact, the tenant can choose how much to pay, or if they pay at all. You're left with no guarantees, just the hope that their business succeeds. And, if it does, maybe your ownership will increase in value. Sounds like a risky proposition, right? Now, here's the kicker. This is essentially how people build their so-called retirement funds by investing in the stock market. Instead of getting a steady income, you're hoping for a piece of the company's future earnings, or a rise in its stock price. But these returns are uncertain, and no one can tell you when or if they'll materialize. The truth is, many so-called investments are really just speculative bets. When you buy stocks, you're taking a gamble with no guaranteed outcome. Think of it like renting out your money. But instead of receiving consistent rent payments, you're offered hopes and dreams, which don't exactly pay the bills. Take stock options, for example. If you buy a call option for a particular stock, you're hoping the stock price will rise above a certain level by a specific date. The likelihood of this happening? It's a coin flip. Even if you own 10 different stocks, your chance of being profitable across the board is slim, just 0.1%. So, here's the harsh truth. Your investment in stocks is often nothing more than a gamble. You're betting on the future, with no guarantees. Yet, most people don't recognize this risk, and the conventional advice is to keep playing the game and hoping for the best. Enter the rent principle. This principle flips the script on how you should handle your money. The rent principle states that if you're putting your money into something, you should expect regular returns, not vague promises of future wealth. You should demand rent in the form of monthly or quarterly payments, whether through dividends, interest, or business partnerships. Instead of playing a waiting game with unpredictable returns, you should seek investments that provide consistent income. Rent should flow regularly, not be a distant, uncertain possibility. Only then can you start building real wealth that isn't based on wishful thinking. Conclusion. The rent principle challenges the traditional mindset that favors speculative, unpredictable investments. Instead, it emphasizes the importance of seeking out income-generating assets that provide steady, reliable returns. That's how wealth is truly built, on a foundation of security, consistency, and smart choices, not risky bets on the future.